I'm Tim Kotzman. I'm here with Adam Beck. Adam, thanks for the time today.
Of course.
What themes do you see coming out of this conference? What are some of your takeaways so far? You were just on uh, French business news. Uh, is that kind of a first, or what is the media landscape that's approaching
Yeah.
speakers evolving, or where are we in this place and time? I guess.
It's a first for me on the French business news, but I think what's happening is there's interest in the Bitcoin treasury companies. Of course, there's the blockchain group, the first treasury company, I think, in Europe and in France. And they are also interested to talk about institutional and sovereign investment in Bitcoin. And institutional meaning ultimately investors' money in pension funds, in savings plans like mutual funds and things like that, which are all things which are, much closer to maturity and happening and moving in the market at this time.
Anything as far as themes from the panels and firesides that you've heard that you've participated in that is different from usual, or is it more about getting like kind of repeating the message and then bringing it to maybe a new audience?
Yeah, I mean, I think, of course, for people like ourselves who are immersed in the ecosystem, we already understand the asset class and we have a view about its long-term adoption track and why that's interesting for all different types of investors. But ultimately, you can think about the ETFs, for example, the US core ETFs, and of course, Europe had ETPs and ETNs a bit earlier, as just a different way for people to access Bitcoin. So there is definitely a segment of society that has a stock portfolio, either managed by an advisor or a broker or self-managed. And the way that they interact with their investments is they ask their broker or they try to find, the ticker. And historically, that wasn't so easy to do, or the broker couldn't help them, basically. And so the ETFs enable that. So I think the access part of it is one part. And then I also think, while people are looking at Bitcoin as sovereign money, like permissionless global money, self-sovereign, you can store it yourself, you don't have to trust the middleman, that's one end of the spectrum, which is the early adoption. But the other end of the spectrum is the traditional money managers of other people's money. So mutual funds and pension funds, endowments, sovereign wealth funds. So there is an element of, that doesn't feel like self-sovereignty. That feels like big mega corporations and sovereigns.
Mhm.
But ultimately, you've got to think that all that money belongs to literally individuals. And so if they are not managing their own investment, they also deserve the benefits of Bitcoin allocations to their pension plan or to their savings plan or to the sovereign wealth fund, which is, managing the nation's reserves. For example, the Abu Dhabi Sovereign Wealth Fund has taken a Bitcoin position recently. So I think that the institutional adoption of those kinds is gaining confidence from a de-risking that they perceive arising from kind of establishment approval indicators, like SEC approval of the spot ETFs. Regulators in different countries look at each other and take cues from the reduced regulatory friction. So the US is much more open for business under the new administration this year. They've removed some causes of friction that made it hard for banks to provide bank accounts to Bitcoin fund managers, to Bitcoin businesses. They've removed barriers to traditional custodians to custody Bitcoin. So they've really opened the market. And clearly there's a self-interest for financial institutions to offer Bitcoin, because if they don't, their investors go elsewhere to try and find it. So I think that is one of the things that's different, is that, the backdrop has moved. Now for an earlier, grassroots Bitcoin investor, that feels alien and it's new and it's not necessary. But for the traditional fund managers, it's actually necessary. Even if the individual fund manager like personally owns Bitcoin, he won't be able to get approval past the management committee without these indicators. So these indicators are ultimately good. And I think it's nothing to feel bad about that a wider segment of society gets access to Bitcoin, even if it's a bit indirect. And, common question is about decentralization, that this Bitcoin is not in private hands, or people don't have control of their private keys. But I think the Bitcoin network and sort of economic incentive, the game theory of it, makes it still okay, so long as, reasonable proportion is in direct hands from people who are paying attention. And ultimately, different fund managers are in competition. So if they try to take some corporate view as the manager, which is not in the interest of their investors will pull their funds and go to another fund manager. So there is a kind of economic incentive to stay true to what the Bitcoin investor is buying into, even if they're coming in via a mutual fund or a treasury company or a ETF and so on.
Yeah, that reminds me of what some of the Bloomberg analysts call the ETF Terradome, where it's a race to the bottom on fees, which is good for customers.
Yeah.
When you see the dozen or so ETFs in the US and then other ETFs around the world, but some of them, when you look at a chart, they just kind of have a couple Bitcoin coming in every day, but the pipes are in place. I guess gradually over time, or if you have one or several nations kind of publicly announce that they're buying Bitcoin, are people maybe not appreciating that those pipes are in place and they could really turn on and handle all of that in a big way? Or what's your view on that? Again, back to ETFs, but.
Yeah, I mean, I think, at the moment, people have looked at the publicly visible information about ETF ownership, and apparently about 30% of the BlackRock IPA ETF is in institutional hands. So ultimately, it uses money, but via managed funds, and the rest is by direct retail investment. Now, probably some of the institutional money is doing basis trading, like some kind of technical trading where they need the collateral in a securitized form. But nevertheless, the early stages of the institutional money is there. And I think it's interesting to talk with people who are plugged in to the innards of the institutional process for investors. Because those investors are seeing that the process takes time. So, they have the ETF rail, they have the indicative regulatory kind of coverage now, the confidence de-risking. But what they're saying that, people on the outside are not seeing is that there's a whole process in place where they have to have a playbook, they have to have training, they have to have guidance until their advisors can advise clients, or until their fund managers they've got to develop a model for what allocation they can recommend. So all of these things take time. So I think, there's definitely a lot of interesting things happening by the news flow of the sheer number of financial institutions that have publicly made announcements every week or so, that, over time that will all come into play, and you'll see a third wave of capital coming into Bitcoin. I think the first wave was the retail, very early investors. Second wave was the retail via ETF, and the third wave is the real institutions. And of course, the institutions are a huge amount of capital that's been managed ultimately on behalf of users, but most users don't manage in a hands-on way their investments, or don't really have an investment portfolio other than a pension fund or some kind of monthly payment into a mutual fund or something like that. So I think that is, the third wave. Plus, of course, the sovereigns now, the sovereign wealth funds are interesting. But if the US does the strategic Bitcoin reserve in a more aggressive way, in terms of putting in a program to buy 1 million Bitcoin over 5 years, which is one of the ideas, that will be a whole new ballgame, because then the other sovereigns, the other countries will have to decide tactically how they respond to that.
Yeah.
I think it's not something they can ignore, because It's very hard for a country to quietly buy Bitcoin. A prop trading firm or a macro trader with private money, they can quietly build a position, but a country can't due to the oversight of different branches of government. So that news itself would start, another game theory where governments are bidding against each other for Bitcoin. So I think that just brings a whole new price regime.
Going back to the blockchain group and strategy and these other Bitcoin treasury companies, Michael Saylor has stated he'd like 1% of the bond market. So that's 1% of 300 trillion or 3 trillion. Does it only take maybe a small number of corporates to kind of attack the bond market in order to really make progress? You don't need to see hundreds of zombie corporations or other corporations adopt, or how do you think about that?
Yeah, I mean, there is a money multiplier effect in money into any asset or share where the price is set on the margin increment. A lot of the money is not actively moving, right? So effectively, that means that the amount of money needed to increase the market cap by $1 trillion is not $1 trillion. Maybe it's 100 million, maybe it's 200 million. And it really depends on the type of investors. If they're sticky investors, what Warren Buffett calls good investors, people who will buy, and if the price falls, they'll buy more, as opposed to the type of investor that's very short term and will panic sell if there's a 10% price movement. So now, interestingly, there are indications that the spot ETF buyers in the US are quite sticky. So they're not selling. They're sort of relatively long-term investors. And I think that is somewhat typical for financial advisor and broker managed accounts. So it's general financial advice to not invest money into shares in general that you need in the next 3 to 5 years, right? And so, you're not going to do yourself any favors investing in the stock market if you invest and you sell it next month, right? So people know that it's short-term volatile, but in the long term has a good track record of capturing economic progress indicators, right? Like an index fund or something. So I think it's the same with taking a position with Bitcoin, except the volatility is much higher. So it's really even more the case that you need to take a long-term view.
So you have corporates, we touched on individuals, institutions. I guess this would be in the institution bucket, or you can correct me. These structured products that are coming out, whether it's an ETF or something else, will that also be another road to Bitcoin as you just see more of these different forms and fashions come out to kind of cater to audiences that want a different level or a lower level in some cases, or higher level of volatility?
Yeah, I mean, I think that there are different ways to get exposure to Bitcoin. So the ETFs, of course, are very direct exposure. And at Blockstream, we hired Sean Bill, who is a successful hedge fund manager, but also ran a public pension fund for 10 years. And it was the first fund manager to get Bitcoin into a US pension fund. And what he saw in that process, it took him a couple of years to get approval from the management committees to get Bitcoin in there, or to go through the process to get Bitcoin in there. It was difficult, and it was on one side of the table trying to get approval, trying to find an asset manager that would pass the approval process, right? And so now on the other side of the process, he's thinking about it from a point of view of how does the package, the structured product have to look? What kind of auditors, what kind of process, what kind of structure, what kind of, design financial characteristics should it have to make it easy? And there are different types of risk profiles, but the low risk profile is actually very different for a pension fund than a family office or a accredited investor, right? So I think it's actually interesting for them to get de-risked Bitcoin exposure, like low volatility or dollar cost averaging, with almost a form of principal protection. So one way people can participate in Bitcoin very indirectly is to provide the US dollar capital for Bitcoin collateralized loans. They're already in the business. I mean, they're diversified, but one of the segments that pension funds are doing is asset-backed lending. So any kind of asset that has a hard value, they can lend against it and collect a reasonable interest. So Bitcoin has that and is actually extremely good collateral because it's very, very liquid, right? As long as keep the loan ratios relatively low to account for the volatility for the interest of the borrower, it's actually extremely good collateral. So that doesn't give them Bitcoin index exposure, but it involves them. And then the way that you can bring them into Bitcoin is suggest they can use the option to convert the interest payments into Bitcoin, which then gets them into the dollar cost averaging. And of course, pension funds are very long-term investors, 10, 20, 30 years, right? So if they are dollar cost averaging the interest, and the interest on Bitcoin loans is like 8 to 12%, sometimes higher, right? If they're dollar cost averaging that percentage of their principal yearly, over a 5 or 10 year period, it's very likely, based on history, that that would exceed the principal, and the principal's still there because they're lending, right? So I think that's one way to get the financial effects, which are a bit like a principal protected note. People who are familiar with derivative products might know about, but in a simple way.
On social media today, just briefly, I saw you have the cast of characters, Larry Locard and Kathy Wood, saying like, hey, not only are we going to have a big print, but all of this tariff talk, all this volatility, it's just like kind of very dramatic when you look at it online. What's your take of what the reality is and how it could play out? None of us know, but
Right. Well, I mean, I think that I'm a fan of free markets, free trades, the kind of basic economic principle of comparative advantage that, free trade is good. So from that point of view, tariffs are bad, but the tariffs of friction that reduce, human progress and economic progress, in my view. And of course, they are paid for by, US tariffs are paid by US consumers, and, European tariffs are paid by European consumers. So it's actually, it affects your own country, not people you implement for. Some people don't understand. But anyway, I think the point is that the headline is maybe a bit misleading to the average person, which is part of the dynamic is it's a negotiating discussion to actually push for bilateral free trade agreements, effectively, like lower or zero tariffs pairwise between countries. So, if Europe is generally a fairly high tariff, unfortunately, the European policymakers like tariffs a bit too much, right? So if the Trump administration is successful in negotiating bilateral zero tariff with Europe, even though the European policymakers don't like it, it would actually be good for Europe economically, right? And the US, of course. So I think, it depends on the outcome. And of course, markets don't like uncertainty. So, the kind of erratic news flow is causing the markets to gyrate. But if the punchline is achieved, which is more bilateral free trade agreements, I mean, I think the ultimate will be just global free trade, right? In Europe, there's a free trade zone. So why not global free trade? It's actually good. Because, there are some other complications like the US reserve currency status. It tends to mean that, the US is generally a net importer. So the people selling goods and services to the US are building up US surpluses. But to my point of view, that is actually an advantage to the US because the rest of the world is effectively paying a tax because the seigniorage on currency, the fact that, fiat currencies are undergoing continuous inflation, it's a form of tax for anybody that holds that currency, including people outside the US at the company level or the sovereign level that are holding US treasuries or using their US dollars to buy US stocks or US real estate. it's all a discount to whoever has the sovereign currency at the time. And, the previous one was the British pound, and the previous to that was another one. So, I think people shouldn't lose sight of the fact that having having reserve currency status is a huge bonus. So you don't want to kill that.
Yeah.
And I think, anybody in the financial industry understands that this is a good thing for U.S. residents, actually. So I think the U.S. made some mistakes in seizing Russian sovereign reserve, sovereign assets. That's kind of no-no because it worried other countries like China that it might not be safe to hold U.S. treasuries, for example, right? So the U.S. wants people to buy their debt, really. So anyway, we'll see how presumably this uncertainty will resolve, and we'll get some calmer markets. As you said, we might get some quantitative easing, interest rate reductions. I think there is some fundamental factors pushing for that, which is ultimately the only way out, I think, of the very high debt ratio at the U.S. government level is to print more money and have financial repression, i.e., inflation, which is very much above the prime rates for decades, so that the debt doesn't shrink in dollar terms, but it shrinks in real terms. So I think that's kind of inevitable. Of course, you have generally a positive thing. You have independent interest rate monetary policy committees in the US and UK and Europe. Generally a good thing, but they are sometimes too slow. So, they wait for the problems to arise before they turn the pressure on. I think the smart move actually for the US government or any government would be to buy Bitcoin or buy this bit bond that's been proposed by the Bitcoin Policy Institute, refinance the debt using the bit bonds, or just keep printing money while other people are willing to buy the treasuries and buy Bitcoin. Yeah. It's a kind of government scale version of the, arbitrage of the dislocation between the Bitcoin future and the fiat current that the treasury companies are using, but at the country level.
Yeah. Before I let you go, what are the top things that you're focused on day to day right now with Blockstream and otherwise?
Yeah, so we're doing a lot of different, and it's all about a Bitcoin mission. So we're building Bitcoin layer 2 for retail payments with Lightning, and also another Bitcoin layer 2 called Liquid, which has got a number of companies, a number of startups, a lot of different active developers building different applications and wallets. And that network is focused on financial instruments, trading, settlement in a sort of using the Bitcoin secure code base for reliability and dependability. It's an open network, but it's able to, have permissionless innovation on top of regulated licensed security interests. Wow. So there are a number of different treasury companies whose stock is on there. So MicroStrategy is on there, MetaPlanet, and essentially, and the blockchain group are in the pipeline. And so the interest there is you get, you can store your assets in a hardware wallet. You can place limit orders that are non-custodial, that sell on the network, and you have global access. You can trade priced in Bitcoin or stablecoins, and you can do it 24/7. So it's effectively the only 24/7 market for treasury stock. And I think it's very interesting to look at treasury stock priced in Bitcoin. You can see that the blockchain group's convertible note is a Bitcoin basis note. So the investor invests in Bitcoin, the debt is in Bitcoin. If there's a repayment, it's in Bitcoin. But ultimately, their objective is to convert that into OldBG blockchain group shares. And so it makes a lot of sense to trade that either directly in Bitcoin, which you can only do in these kind of non-custodial platforms like SideSwap. These are Liquid companies on Liquid that offer different wallet trading technologies, SideSwap and a number of other platforms. So Digital Garage has SettleNet, and there's TDEX, which is another network for doing this, all using the same technology so that you can directly trade. The Bitcoin market is 24/7. It's frustrating to the Bitcoin investor. They can't, it's very hard in Europe, for example, to trade Metaplanet. You have to wait up until like 2 a.m. or something until the market opens, or it's just closing at 7 a.m. So it's not, it's difficult to trade. So 24/7 markets are interesting. And the permissionless innovation, coming to financial instruments, I think that is a huge potential. And I think, a lot of people have been excited about that over the last 5 years. But I think that really liquid is becoming the nexus for the regulated financial instruments with security interests, investor rights, unlike the ICO kind of thing, which is sort of tending to flame out. You see the dominance index is growing about double now what it was a couple of years ago. And if you look at the inflow, the third wave of institutional money, that's much more heavily biased to Bitcoin. So I can see the dominance index continuing to grow and using Bitcoin technology because it's the most robust and reliable. I think the key is to keep it simple, keep it robust. It's easy to market things based on, complexity, but actually nobody really wants experimental technology when their money's on the line. They want boring, robust, reliable technology. And Bitcoin delivers that. It's the most robust code base for that kind of thing.
And where can people go for that 24/7 market? Is it blockstream.com?
No, there's a number of different markets, but if you look at sideswap.io or TDEX Network or SettleNet, there's 3 different companies with markets, and there are a number of Bitcoin exchanges with liquid integration. Some of them have securities licenses. So there's Bitfinex, the exchange, but there's also Bitfinex Securities, which is offering, it has licenses in the securities market. So, some of these securities are available on Bitfinex Securities sub-platform as well. And there are other platforms that are trying to cross over to bring securities into the Bitcoin trading world on a centralized exchange as well. And I think the other part of the picture now is the custodians. So since the FTX, failure, it made the investors more aware of the platform risk, the custody risk. And so they have worked with custodians to ask the custodian to hold their assets while the exchange doesn't have the asset. They just have an IOU. It's actually the way shares work for good reason. So that, learned lesson of history is finally coming to the, crypto trading world. So Blockstream is working with Kamenu. Blockstream Capital Partners made an investment in Kamenu, which is a qualified custodian, institutional grade custodian, to integrate more liquid connectivity, liquid integration, custody of liquid securities or liquid assets, to kind of build the connectivity for that to happen.
Awesome. Adam, thanks for your time today. Appreciate it.
Thank you.